So, when documenting the transaction between buyers and sellers in the market, we often look at price from a premium to discount point of view, which would be your retail and wholesale. These price extremes help us identify where institutions find it cheaper to buy and find it expensive enough to sell to make a profit. These zones consist of breakers, which would be your shelf, your gaps, your order blocks, your rejection blocks, and your old high or old low. So let's take a look at an in-chart example. So here you have your PD arrays, which would be your breaker, your order block, and in this case, you have a second order block, which would be your extreme premium order block, and you have your swing high. And if you look closely, all of these PD arrays are located in your zones. They were all located within your premium zone, which is the top 50%. So the first step in identifying the premium and discount levels, you need to identify your operating range. Your operating range is basically your last major swing low and your last major swing high. And everything inside of here is your operating range. So what you do next is you pull out your fib and make sure you cover your operating range. And I'm going to show you the settings in a second. So with this fib, we split our range into two halves. In discount and in premium. We'd be looking to be buyers here and we're looking to be sellers here. We're looking to sell back inside of our previous range and we're looking to be buyers here to expand. And these are the settings. So when it comes to PD arrays, there's three ways you can utilize them. And in this lesson, we're going to cover one, which is our micro and macro correlation. So to start things off, first thing you want to do is you want to locate your operating range, which would be your last swing high and your last swing low. And the question here is, why would you identify this as your swing high? The reason is because this bearish weekly candle, we're on the weekly time frame, the bearish weekly candle engulfed the previous candle. The bearish candle took over the bullish candle. That means after a sequence of bullish candles, which of course on the daily time frame would look more of a higher high, higher low structure, price sunk down on the weekly time frame, indicating that a reversal might come. And of course, this in the markets, nothing is for certain. So you can never say for sure price is going to reverse, but we work in probabilities. So now that you have your operating range, you want to pull out your fib. Now that you located your weekly range and your weekly premium and discount levels, your next step is to locate your PD arrays. And to do that, you need to go on a lower time frame, which in this case, from the weekly, we're going to move to the daily. And there's another purpose, of course, why we're going to specifically go to the daily. So pay attention. So now let's locate all our PD arrays in our discounted level. Why are we specifically targeting our discount level? Because again, unbiasedly, if you go to your weekly time frame, price is bullish. Now again, you can look all the way from 2020. For the past 3 years, price has been bullish. And recent price action is showing that price formed a swing and broke that swing. Well, every time a swing is broken, a higher high is formed. So this is another indication that price is going to continue bullish. So now in the daily time frame, we are looking for weekly discounted PD arrays. So the first thing I notice here is a breaker. What is a breaker? In this case, it's a supply turned into demand. So we have a breaker here. We have a order block here. We have a rejection block here. and of course our swing beneath our rejection block. So we are looking for a price to react in any of these levels. And on the daily time frame, what we're looking for as a confirmation is an engulf to occur within these areas. So once an engulf occurs, we can start looking at this pair. And that's what I do with all forex pairs that I trade. I have my zones marked up and I look for my daily engulf. Once I have my daily engulf, I can start looking at that pair for a potential trade because now a few things that I have are in line. And we're going to cover this. So now our macro is bullish. We're waiting for our micro now to turn bullish. And how are we going to determine that? By having an engulf at a discounted area. So if price comes down here and engulfs, we can anticipate a reversal. A daily engulf a lot of times is a reversal. So we can anticipate price to go here. Price comes down here and gives us a daily engulf. We can anticipate price to come up here and so on, so on. So there's no point to look at a pair if you don't see a weekly and daily bias correlation. So we can see prices reacting from our breaker. This is not an engulf because the body did not take out the wick of the previous day. So nothing is confirmed yet. Okay, we finally have an engulf. So now that you have an engulf, what do you do next? Your next step is to go on a lower time frame. You can pick anywhere between 8-hour to the 4-hour time frame. You can go sometimes as low as 2-hour, depends on the pair's average daily range. And I covered this previously. So we're going to go to the 4-hour. And what are we looking for now? We know that price is reacting from our daily breaker. So the fact that price is reacting from our daily breaker, when it comes to PD arrays, on the micro, you would want to see a identical setup. So here on the 4-hour, I would look for a breaker setup. Why breaker setup? Because on the macro, we use a breaker. So on the micro, as a correlation process, we would use a breaker too. And another thing is you can pull out your fib again. And what you do here is, this might get confusing. And I was actually hesitating by sharing this just because it might confuse the viewers. But for you guys that's been watching me for some time now, it's about time we take it to the next level. What you want to do is you go on your daily time frame. And what you see on your daily time frame here is swing low being formed. Like we said previously on our weekly time frame, when the weekly engulfed, a reversal will more than likely occur. Not every time, but when working in probabilities, it's more than likely. So you mark this as your low and you mark your previous high as your high. So the case here is you're looking for a setup. You're looking for that identical breaker setup to occur in your discounted area. Why in your discounted? Because you always want to purchase in discount and you want to sell in premium. So now what happened is your daily and your weekly are in line. Your daily is reacting, your weekly is reacting from your discount, and now you're looking for a setup on the discount on your daily. So this ups your probability tremendously. And this is something every trader must use. So what we're going to do is we're going to mark out our discounted level. So now when we go on our 4-hour, we are looking for the setup to occur here, anywhere before this area. Now, again, if price comes up here and break structure continue lower, this trade is no longer valid. This must hold as the low. Why should it hold as the low? Because this was the daily engulf. And of course, if you watch my Wyckoff videos, you understand why this should hold based on your Wyckoff schematic. So now we're looking for a breaker setup to occur identical to the previous one before it reaches this area. So we have a break of structure here. We have a break of structure. So where is our breaker? Our breaker is right here. So now you can take your entry right here with your stop loss underneath your breaker, with the potential of your first TP can always be going back into premium. And to complicate it one more time, you can pull out your fib. Let me change my settings. And you can take your trade all the way to deep extreme. So this could be your potential TP, which is almost a 5-to-1. So hope you guys enjoyed this lesson. Make sure you like, share, and subscribe. And I know this lesson might have been a little bit complicated. So what you must do is replay the video a few times and test it out yourself. And make sure you use the code ETM YouTube for 25% off everything on the website.